Yeah, hello everyone. Welcome back to my channel. Okay, if you're new to this channel, consider subscribing and liking this video because if you're watching this video, that means you're a boom and crash trader, and I am committed, especially from the new year 2022. I'll be committed to dropping a lot of content as it regards boom and crash. And very soon I'll start dropping weekly analysis in terms of my what I will be looking at in each of the boom and crash markets for that week. Yeah, so consider subscribing right now. Hit that post notification bell so that you always get notification whenever I post a video. So about today's video, I'll be talking to us about a few things about boom and crash that I think every beginner needs to know. First of all, I'll tell you about what the market boom and crash is all about, the benefits of all the advantages of trading boom and crash. Then I'll talk to you about how to calculate the pips relative to the lot size, because that's how you know the risk you are taking in each market. If you don't know how to calculate the lot size, if you don't know how to calculate the pips relative to your lot size, you may not know the amount of money you are risking in every entry. And this is what we do, or this is what we know that actually helps risk management in terms of, if I'm going into this market now, in case it doesn't go my direction. Of course, this is Forex, you won't always get everything right. Now, if the market doesn't go my direction, I should be taking out at this price, and that price relative to your lot size, there is a particular amount it should be. But most people that trade boom and crash, I figure out that they don't know. They just do trial luck, take multiple entries. It goes their direction, they win a lot. It goes against them, they lose a lot. Just like that. It's helping, it's working for a lot of persons, but that is not the right way to go about this. If it's working for you already, consider knowing much more and see how much more it will benefit you get. For example, now you can't stand the platforms to speak if you don't have understanding of these things. You might not be able to represent what you do if you are not conversant with this knowledge. So, but before we do that, I want you to consider joining my channel, because if you're a boom and crash trader, I drop free signals once in a while. That's once a day or 3 times a week in my free channel. And if you really trade the boom and crash market often, consider joining my private group. I have a private group on Telegram. Of course, I'm closing the private group this December. I'll be starting over again by January. So if you want to sign up, send me a DM via the link in the description. Then if you want to join my channel, you want to see history of what we've done, how we kill the market, sometimes we lose as well. You see everything in the channel. So just hit the link to my channel is on the description as well. Just join my channel and you won't regret it. So before we start, I want to tell you 2 things about boom and crash. So let me open my MT5 account. Okay, this is my MT5 account. I usually like black background, but I had to change to white because of this video. So this is it. There are 2 kinds of candlesticks in the boom and crash market. There is one thing that makes it very unique. If you check, if you're looking at this chart right now, you discover that in lower time frame, 5 minutes and 1 minute to be precise, you will see that there are little candles just going one direction as though there is nothing coming. They are called the ticks, the green candles. This is crash. In the crash, the green candles are called the ticks, while in boom, the red candles are called the ticks. So, which is that's in terms of crash, the bullish candles are called ticks, while in boom, the bearish candles are called ticks. That's these small candles you see here. These small candles that are just going like this. They are just going in their sequence. It's as though there is nothing happening, everything. Some people prefer to trade these ticks. They can just catch like 4 or 5 ticks and they are out of the market with very big lot size. This is very good. It's a good strategy. It works. Just that the day it will go against you, you lose a lot. You can lose your profit of like 4 days at once, or profits you've made accumulated all through the day can just go all of a sudden. So that's just the disadvantage. But if you've mastered your art, your craft around it, it's very cool. Some people use indicator for that, but me, I'm not really a fan of trading boom and crash with indicator. If you have the basic knowledge of, okay, not really basic, but if you have some technical knowledge in forex trading, it will be much more easy for you to catch these drops and these spikes. So what I mean by drop, you see this red candle here, this huge, oh sorry, oh fuck, let me move this here, sorry. So this red candle, it's called a drop. In the crash, it's called a drop. If you go over to boom market, it is something different. The big candle, you will discover that it's actually a green candle. Like I said, the little candle in boom, they are the ticks, which are these small ones just coming in their sequence. So if you check, you see a long green candle that just shoots up. Here they are called the spikes. So in the boom market, you see the candles only shoot upward, which is why it's called boom. While in the crash market, it only shoots down. So that is the difference between the boom and crash market, and I think that's what gave them the name boom and crash. So this is just the difference. One is shooting up, one is shooting down. So in the crash market, you will never see a candle shooting up. So if you want to set a stop loss, that means the market will gradually be going towards your stop loss. It will not just go all of a sudden. Unlike people that trade the ticks, market can just hit their stop loss all of a sudden and even push it to wherever the candle will stop. So yeah, that's one thing you should know. So we have the ticks candle in boom and crash. We have ticks, the small candles in the lower time frame. They are called ticks, while the huge ones, they are called the drops and the spikes in terms of crash and boom respectively. Then also there is something I want you to note. If you're setting stop loss in boom and crash, it's different from currency market, because that's if you're going against the drops and the spikes. Let's assume in this market now, I want to buy, maybe I want to cash these little candles here. I just want to cash them. If I want to set my stop loss, there is one thing that I believe you all should know already. But if you are new to boom and crash, this is all you should know. If you are going against the spikes or the drops, know that your stop loss is wherever the drop ends. Okay, for example, let's assume you took a buy here. Probably you saw this consolidation, or some people call this other block. Then you saw this continuation pattern, then you took a buy here, then go in your direction. Then all of a sudden, maybe let's say your stop loss is here, or just below this place. Now you took the buy, it's moving towards the direction. The first drop happened, it gets your stop loss. The second drop happened, let's say your stop loss is here, but this second drop busted your stop loss down. Automatically your stop loss will come here, wherever the candle stops. Assuming this candle come all the way down, that's where your stop loss is going to. So that's just the disadvantage of trading against the spikes and the drops. But if you are trading the spikes and drops, you don't have any problem with stop loss. It will be wherever you want it to be. It will activate there. Yeah, so that's how it works. Then okay, I think you've understood that already. So let's move to the video proper. Alright, so understanding boom and crash. Like I said, boom and crash is, okay, I've said that before in my other video. This is my third video. Boom and crash is a synthetic indices instrument, and it operates differently in terms of the other volatility index market. Boom and crash operates uniquely on its own. It has a different approach. Also, we have the jump, and I think we have the jump. I don't really trade the jump because I don't understand it yet. Now sometimes it takes too long for the jump to happen, and I think the jump happens both sides. It can jump up or jump down. But in crash, it crashes only one way and spikes only one way. That is just why I like boom and crash. Sorry, I kind of have flu, but I have to do this today because it's part of what I've told myself I'll do today. So coming back to boom and crash, so there are ticks and drops, spikes as it regards the candlesticks. Of course, that's what I just explained to you. And also the boom and crash is like a virtual market. It's like a virtual market. It's not a real life market. It's like currency trading and meta trading, crypto trading, and the rest. This is a virtual market offered by Deriv broker. Of course, Deriv is a very nice broker. Talking about Deriv, he's a very, very good broker. I've heard about the broker some years ago, and up to now it's like they are even improving every day. They are now live on Instagram, having so much followers and the rest. So I think he's a very nice broker. If you have not signed up with this broker, I think you should do so. Link is in my description. Just consider signing up with this broker. They are very cool for so many reasons. Maybe I'll do a video on that, especially why you should join this broker, or why you should start trading this broker. I'll give you some benefits and the rest. But for the sake of this video, let's move on with what we need to do. So that's about Boom and Crash from me. Of course, there's more to it, but this is what I think is obtainable for now from my end. Now, what makes this market unique? The Boom and Crash market. First of all, you need a small account to start trading Boom and Crash. The margin required for Boom and Crash for a small lot size, the smallest lot size in Boom and Crash is 0.2 lots. For the margin that is required, it's usually between $3.8 to $7. So if you have an account of $10, you can start trading Boom and Crash. Even an account of $5, you can start trading Boom and Crash, but you might not be able to open more than one position, and you might not be able to open a position in, I think, Boom 1000 and Boom 1K. I think so. One of them has high margin. I think some of them have high margin, some have low margin. Like Crash 500 and Boom 500, they have low margin. But I think Crash 1000 and Boom 1000 have a higher margin. So if you have an account of $10, you can start trading Boom and Crash. Even $5, you can start trading some of them, but just opening one position. So that is one advantage. You need a small account to start trading in this market. Then there is consistent move in this market in a particular direction. Like I showed you the ticks, I showed you. Let's go back there. As you can see, these ticks are so consistently moving towards the direction. Like they are just going. If it's going up, it's going up. Just going. Like if you come to Crash, the same thing you will see. Okay, sorry, that's the one Crash already. Let's go to Boom. The same thing you see, like there is a consistent move in the market. Like it's so volatile. If you trade gold and Nasdaq, you think you've seen move, you've not seen nothing here. Come to Boom and Crash, and you know that there is volatility. You see, so this thing just happened, and there is something traders are looking for. So there's consistent move in the market. Like if you're selling, sometimes the market will just be going down for you. If you're buying, just going up, just like that. So even if the market is choppy, it's still moving in lower time frame. So that's one thing. Then there is big moves in few minutes. Oh, this is my fave. If your strategy is about catching the spikes and drops, you'll discover that it's very easy for you to make a lot of pips in few minutes. Okay, let's take for example this particular place. Now let's say you took an entry. These are 5 minutes candlesticks. Now you took an entry here, then you cut these 3 spikes, then you closed your entry. Now these 3 spikes is 15 minutes. Yeah, from here to here is 15 minutes. Now let's calculate the pips. Here, okay, let me use this. Here it's 4759. Up to here is 4781. Let me get that again, sorry. 47, okay, let's say 47660. So here you have 4780. Then you've cut 20 pips in 15 minutes. In 15 minutes, this is even Boom 500. That's why it's that small. Now let's go to Boom 1K. Let's go to Boom 1K. Now, assuming you took an entry here, a buy here at 13145. Now from this place down to the top, it's just how many minutes? Let's count: 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, 75. That's less than 2 hours. In less than 2 hours, you've cut from here all the way up here. Now let's calculate the pips. Here is 143, 14143. Here is 13332. That is 143, 332 minus 143. That's how we'll get our pips. Okay, my calculator: 332 minus 143. You've gotten a whopping 182 pips in just less than 2 hours. That is how good this market is. Like, it's just like magic. You catch big moves. If you know what you're doing, you catch big moves in few minutes. Now, also, number 4 is that you can determine your loss easily. Like, if you know how to calculate the lot size related to your pips. So that's what I will be teaching next. So let's go over to that now. How to calculate pips. Yeah, so about how to calculate the pips. This is something that every trader should know, and in Boom and Crash it is very, very easy. It is very, very easy. So I wrote something down here. It's first of all, the lot size in Boom and Crash. The minimum you can use before now is 0.2. Then the maximum you can open at a time is 50 lot size. But I think Boom and Crash just added, that's deriv. They just added Boom 300 and Crash 300 last week, and in that market you can trade 0.1 lot size. Yeah, just in Boom 300 and Crash 300. But in Boom 1k, Crash 1k, Boom 500 and Crash 500, the lowest lot size still remains 0.2. So now let's do a calculation on this. Of course, I'm gonna do a fresh take a fresh example so you can see how this calculation was done. So let me take this off. So now we're gonna okay, for your pips. Now your pips, of course, you calculate your pips by the price in the market. That's how you calculate your pips. So let's go over to the market and get a price. Now the market is currently at 12,022. Sorry, 12,022. Now this is where the market is currently. This is a demo account. This is not a live account. In case you saw this, I don't have this kind of money, please. Of course, I don't have this kind of money yet. So before we continue with this video, consider subscribing to this YouTube channel. Just click the subscribe button. It's for free, completely for free. Yeah, because I'll be doing a lot with Boom and Crash this 2022. So I want you to subscribe and click the post notification bell so you can receive notification whenever I post a new video. One thing I really want to do is share my analysis with you guys every week. Yeah, I've not started doing that, but very soon in this new year I'll be starting that, sharing my analysis with TradingView on laptop. So I'll be sharing my TradingView analysis with you guys, not with my phone. Of course, phone is for executing of trade, but I do my analysis with the laptop sometimes, although I've mastered using my phone for analysis, but the ones I'll be sharing with you guys will be done with laptop TradingView. You're gonna see everything like clearly. So consider subscribing, like this video, hit the post notification bell, just support the channel by doing this. Comment, leave your comments, whatever you think. Let's reason together. Okay, now let's come back to what I was saying. Now we are in Boom 1000. Let's use this for example, how to calculate the pips. The same thing applies to the other markets. Now we have the price currently at 120.28. Now let's assume that we want to take a buy here, and okay, let's assume we took a sell here. Now our stop loss is here. Now our stop loss is at 120.48. 120.44 rather is our stop loss, and our entry is at 120.27. It's now at 120.27. So 120.27. That's, look at it here. Now our stop loss is at 120.44. Now let's go and take down these figures: 120.27, 120.44. So our entry is at 120.27. Now our stop loss is at 120.24. Okay, 44. Now let's assume your account is very small and you decide to use the smallest lot size, which is 0. Sorry. Okay, let me take this off. Okay, now you took the entry with 0.2 lot size, which is the smallest. Let's assume your account is very small. Now you took the entry with 0.2 lot size. Now what you are looking to risk in this market now is the difference between the your entry and your stop loss. Now the difference between your entry and your stop loss now would be this. This is how you calculate it: your entry minus your stop loss. Of course, if it's a stop loss, you will get a negative value. If it's a take profit, you get a positive value. Now this is it in terms of okay, now your entry is 120.27 minus your stop loss, which is 120.44. Now if you go over to the calculator and you do this calculation, 120.27 minus 120.44, it's equals to minus 17. Now your stop loss is actually minus 17 pips. This is pips. Now how can you get the value now in dollar? Remember, we said our lot size is 0.2. Now our pips stop loss is 17 pips stop loss. Now how can you know the value here? That's the amount you are risking. This is how you find out. You multiply your lot size by the pip, that your stop loss. Now our stop loss is 17 pips. I told you already, this is how you get the pip calculation. That's what we just finished doing. So now this is how you know the value of the pip in dollar relative to your lot size. Now what you do is you multiply your lot size by the pip. Now we say we are using 0.2. Now let's go over to our calculator. You say 0.2 times 17. Now it gives us $3.4. So automatically what you are risking in this market is $3.4 only. Now using the same example in terms of the entry and the stop loss, now let's assume we are using one lot size. Now this is what you do with the this is how you do the calculation. Same thing apply. Multiply the lot size with the stop loss, which is $17 here, 17 pips. Now you multiply 1 by 17. Of course, without going over to the calculator, you know this will be $17. So your risk in this market is $17 because you used in one lot size. You know, the higher your lot size, the higher the risk. Now let's assume you use 5 lot size here. 5 lot size here. Same thing apply. You multiply 17 by 5 to get your value in dollars. So now this is 17, then times 5, it gives you 85. Now you are risking, with the example we just went through, you are risking $85. Now once again, if you've not subscribed to this channel, please just pause in a minute and hit the subscribe button. Please just promote the channel, encourage us, because we're doing all this for free. This could have been for just VIP people in my Telegram group, but I'm sharing this with the world because I feel there's someone out there that really needs something like this. Yeah, so this is how we calculate it, and that is it. So if you've not joined my Telegram channel, this is my Telegram. Let me just show you guys. Okay, this is my Telegram channel. If you come to my Telegram channel, you'll see a lot of stuff going on there. you see a lot going on, like a lot. I share stuff with this group, for free most times. Sometimes I share my VIP analysis on this channel for free. Of course, we catch the spikes like as though it's just normal. We do that always. Sometimes we miss out. Sometimes it doesn't work out, but much more of the times it works. Like we know what we're doing. That's the basic thing here. We know what we're doing. You just see, like, this is how many spikes: 1, 2, 3, 4, 5, 6 spikes in a row. This is not a guesswork. You know what we're doing. Consider joining the channel. If you want to chat with me on joining the private group, send me a DM if you have the link in the description on Telegram. Of course, I will always be online to respond to you. This is how we do it. We kill the market. We're killing it. My channel is very entertaining. Once in a while, I drop videos like this. Let's watch.
It's the most wonderful time of the year.
That's one. So once in a while. Now, this is one of our weekly report. I think as at third week of December, I think. So this is our weekly report, and in the VIP channel, as you can see, we took a total of 9 trades and we won 7. And we lost just 2. And most times our profit in the wins is like times 2, times 3, times 4 of our stop loss. That means just 1 win in the 7 covers the 2 losses. That is how good it is. That means we had a total of like 6 wins. Like we like the 6 wins are all take profit for us. Sometimes the value is not always like this. Sometimes, like, let me look for the order report before this. I just want to show you guys something, because one thing, if you're dealing with people, you have to be real with them. Okay, this is our previous VIP weekly report. As you can see here, we had a total of 13 trades. We won 7 and we lost 5. Sometimes you look at it like 1-7, that means just a total of 2 wins. No, now I had to do the pips calculation myself, and as you can see, we had a total of 315 pips in the wins, and the loss, we had 100 pips. 100 pips in the loss. Now, as you can see, we in a total, taking the loss from the wins, we had a total of 215 pips, meaning that if you took a trade of 1 lot size each throughout the week, you'll be making over $215 in just that week with 1 lot size. If you took with 10 lot size, you're making $2,000 plus, just like that. So this is it. Yeah, there is something I forgot to say. Let me just say that quickly. In the boom and crash market, the lot size is different from currency market. When you hear 1 lot size, don't think it's a very big lot size. No, it's not. From the calculation you saw that it's not a big lot size. In currency market, 1 lot size, that's the standard lot, is like a $10 in every pip movement, but here it is $1. So automatically 1 lot size in boom and crash is like a mini lot size in the currency market. You get, and the 0.2 lot size is like a micro lot size. That's 0.01 lot size or 0.02 lot size in the currency market. So that is it. Boom and crash lot size is different from the currency market. I took some time to actually observe this and I understood it. That's why I'm sharing it with you guys. So when you hear 1 lot size, don't think it's a very big lot size. But if your account is very small, lower than $50, I will advise you use 0.2 lot size. Even lower than $100, use 0.2 lot size. But if you have an account of up to $500 and more, you can use 1 lot size, maximum of like 3 positions, and the rest depend on your risk per time. So that is it, guys. Now before I end this video, once more, subscribe to my YouTube channel. They just run a recap. We talked about boom and crash, and we said it's a synthetic indices instrument and it operates differently. I explained that to us. I said there are 2 kinds of candlesticks. We have the ticks and the drops / spikes as regards boom and crash. Then we say what makes this market unique is that you can have a small account to start with. There is consistent move in a direction. Then there are big moves in few minutes. You can determine your loss easily. That's if you already know how to do this calculation here, how to calculate the pips. So if you enjoyed this video, I want you to subscribe to this YouTube channel. Of course, the more you subscribe, the more you like our videos, the more we're getting to reach a larger people out there. So please help us by subscribing and liking this video. And also consider joining my Telegram channel. If you want to keep in touch with me on a day-to-day basis, consider joining my channel. I do a lot there. We do a lot, like it's a community, it's a community. We do a lot there. So I want you to consider that. And this January we are having a competition coming up. Not a competition, actually, it's a contest. Yeah, where I'll be giving trades, signals. We're having a challenge of growing a $50 account to a $6K account in 3 months. In 3 months. When I did my calculation, it's so easy. I think the calculation is here somewhere. Let me just show you guys. Now this is it. It's that simple. I know some of you want to do this for yourself. Of course, you can try if you can. The difference between you and your own and this one, is that I'll be the one giving the trades. So if you can't catch trade like I do, then you might not be able to hit the target. So this is the plan. Week 1. The first week we're looking at just making 50% profit. Second week 50% profit. So just 50% profit in a week. That means like 10% profit a day. In average, sometimes we make 20% profit a day. Sometimes 30%. But plus and minus, not every day will be a good day. At the end of the week, we will surely come up to like 50% profit with a very good risk management. I want you to sign up to this challenge. It costs a little fee, as you can see here. Monthly is $25, 3 months is $60. First of all, just join my channel. You see every other details right there. Or send me a DM, and if you don't understand, I will explain much more to you. Okay, so it's all about growing. My username on Telegram is I am a trader. The trader has 2 arrows, like double arrow. Or you can just click the link below and the post notification in the description. It will take you direct to my inbox, so you can send me a DM. I'll be online to reply you, to talk to you. Yeah, so that's it, guys. And also, if you need an account manager, if you want account management, I actually post on that. I was doing that at the time, but the accounts people were bringing were just too small, $50, $100, probably because of the publicity I put out there. But I discovered something, that small accounts are really terrible to manage in terms of risk management. Sometimes you just want to flip the account, and when it goes wrong, you lose people's money. It's not really cool. So what I do now is that the minimum I can trade for you is $200, and we have to have a risk agreement. The risk agreement would be that if there should be a loss, in this market, in your account rather, probably you tell me I can risk just 30% of my equity or 50% of my equity. Now, if I'm trading and let's say trade go bad, and let's say it has gotten to the percentage you are willing to lose, I'll stop trading the account. I'll send you a DM. Okay, sorry, we've hit the loss limits, and that's it. Instead of me blowing people's accounts, or like other account managers out there just blow your account, do whatever they like. No, that's not it. But that is for people that have that want to that want $200 accounts managed and something like that. That's still small. But I'm really looking forward to trading up to $5,000 account, a $10K account, like managing $10K account. With this kind of account, it's very, very, very difficult to lose. We don't have to make 100% profits in a week or in a month. We just need to make consistent profits of like $100, $200, $500 consistently in a day, and that is very much achievable with very minimum risk. That's what I'm looking forward to. So if you want an account manager, consider sending me a DM. Let's see what we can do together in our first 1 month. Let's see how it goes. Yeah. So that's it. Consider that, and I'll be online to chat you up. Listening to you. Let's do stuff together. Okay. So peace out, guys.